have joining us now Sandip Sabharwal. Sandip, wanted your take on Avenue Supermart. Have you gone through the numbers and how do you see the growth there?
Yeah, Avenue Supermart has been a stock which has attracted a lot of attention and has traded at very high valuations for a very long period of time. However, I think we've seen growth has been continuously lagging expectations, especially on the profitability front. So this quarter, because of store additions, etc., although the revenue growth has been strong, but then that's led to higher costs and higher cost pressures. And over the next couple of years, I think their capex intensity will also go up. The additional cost they'll need to expand is going to go up. So cash flows are going to remain under stress. And the stock trades at around 100 times earnings for this year. And I think even if we aggressively assume a 15% earning growth for the next 2 years, still 2 years forward, it will be at a valuation of around 70 times. So I think these valuations are excessive for a company where the growth has to be much faster for such valuations to be justified. So I think for such valuations to be justified, the earnings growth has to be at least 30% per year. I would think that this stock is significantly overvalued at the current price.
Still, see investors holding on to this stock despite the fact that earnings are much lower than 30% for DMart. Uh, do you think the stock will be in the same range for a couple of more quarters because some of its key segments like merchandise and apparel all are underperforming with respect to growth?
See, some sectors, there could have been a deferment of sales also this quarter because of the GST rate cuts, which because the announcement to the actual implementation was a significant lag. So I think the October to December quarter is going to be good for most retailers, given the impact of GST cuts combined with the festival demand, etc. However, I think specific to Avenue Supermart, like I said, it's heavily overvalued. So what there are two ways the stock could react over the next few quarters. One is that we could see a correction, which will see valuation become more reasonable, and then it could come into some sort of buy zone, or it will go into a long phase of consolidation because given the liquidity in the stock, given the concentration of holding, many of the investors uh, are reluctant to sell the stock. So what happens in such kind of stocks is that they go through long periods of consolidation, which might not be couple of quarters, but couple of years also.
Sandeep, hi, good morning. This is Harsh Saita here. Sandeep, let me first take your view with regard to some of the IPOs to start off with. You've got Tata Capital, you've got LG Electronics, very, very strong interest coming in from investors. Twofold question on my part. One is, what does this mean from a domestic inflow perspective this week? Because once all of the allotments are completed, dust settles down, you'll have a large amount of liquidity come back to investor portfolios. Point number two is with regard to how you're looking at Tata Capital in particular as an IPO. Does it look interesting in terms of if it were to open in around the IPO price, would it be something that looks attractive to you at 326, 3.4 times book, and a Tata Group name or the Tata brand name backing the company?
So Tata Capital IPO was not exactly cheap, like at around 3.6 times price to book. So it's still more expensive than most of the NBFCs, except for couple, and those couple will include Bajaj Finance. And it's also more expensive than most of the large cap banks. So I think it would be similar to banks like ICICI, HDFC in terms of price to book, still are slightly higher. So uh, and it does not have anything which it offers, which we could say that this is so distinct that because of which it should trade at a higher valuation. So that's one part. The second part is overall NBFC outlook is positive, given the regulatory changes, given the rate cycle, which tends to help NBFCs more than banks because they tend to be bulk ballers. And with the recent changes in GST, there's a fillip on in terms of consumer durables demand, which always helps NBFCs. So there is positivity for the entire NBFC sector on one side. On the other side, the valuations are not really very exciting. So I would think that I don't see any big downside in the stock, and I would think that there shouldn't be any significant upside also.
Okay, and Sandeep, I'm curious to know your view with regard to real estate in particular. We've seen very good traction and very good updates come through in Q1 and Q2 as well, FY26. The updates have been quite strong. Is this a sector where we've seen a bit of a correction and could well be a sector which could outperform over the next 12 months?
Real estate again, we had a huge run in real estate stocks. Then the real estate sales obviously slowed down, and we had a slowdown. And now with the monetary policy cycle playing out the way it is, we are again seeing some traction in terms of the pre-sales, which many of these companies are reporting. So I think it's important to be selective in this sector. So I think we focused on larger real estate companies which have debt under control on their balance sheets, as well as profitability traction. So recently we have also added into DLF because I believe that's one of the better plays in the real estate sector. So it went up, it's corrected, and it's gone through a long phase of consolidation. And at the current valuations, I do see a reasonable upside of 15 to 20% over the next 1 year. So overall, demerger should be a positive trigger, like in terms of sum of parts value for the stock. But I think, given the fact that there is a delay in listing of the second company, so that's why I think some investors are jittery and exiting. So I would think that at current prices, given the recent performance and the fact that most of the negative should be in the price, the stock looks like having decent value and is the only stock among the auto stocks which has not participated in the auto rally. So I would think that people who are willing to take that risk of holding the unlisted stock for some time, I think these prices are pretty reasonable.
Also, if you can give us a sense of some of the earnings that came over the weekend, Wari Energy, if you look at Wari or GK.
Wari Renewables.
Sorry, Wari Renewables.
So Vary Renewables, obviously, like most of the solar companies, we've been seeing an improvement in operating profit margins, largely driven by the significant protection they enjoy in terms of import duties, PLI benefits, etc. However, I think the risk of this sector is that the capacity additions which are planned and which are coming on stream over the next couple of years are so huge that there is no way that the demand in India is going to keep up pace with these kind of capacity additions. So the risk is lower capacity utilizations as well as a potential price war going forward. So I would be very, very wary of the entire solar ecosystem, except for battery storage, where we will see momentum, and the valuations are also not cheap.
Sandeep, HCL Tech ahead of the results, how do you play that stock?
Like I don't know how to play the stock on a single day today, but overall technology stocks like the Indian outsourcing companies stocks are largely beaten down and do present some contrarian value at this price point of time. So it's not that they'll go into a secular uptrend, but they do offer like even TCS at this beaten down valuation, Infosys or HCL Tech or any of the uh, at least the large cap IT company, not the mid cap where the valuation is still extended, they do offer value. So depending on how HCL Tech reports, which the immediate reactions will be based on that. But overall, I think there is upside in most of these stocks at these valuations.
Kunal, uh, Tata Motors. Today is the last day of trading before it gets demerged or recorded happens tomorrow. What is the kind of strategy that you can use in Tata Motors?
See, price-wise, I think it's beaten down significantly. So my sense is that the last 2 weeks of volatility. So there was a point I remember Tata Motors was at 680, had come back to 730, and now I think on Friday we managed to close back at 680 or 690 levels. So I think price-wise that volatility was because of the adjustment towards the demerger. But I think once that settles out, I actually believe that it could be a very good level to look at a confident buy on Tata Motors, because we are at a point where the auto stocks are going through a kind of a fantastic rally for themselves on the upside. Whether now you look at the leaders, which is the likes of Maruti, Hero MotoCorp, Eicher Motors, which have been doing exceptionally well. There will be a point, and there has to be a point where even the underperformers, and especially at a point when these stocks are beaten down towards major support levels, the risk reward starts to look attractive. So I actually believe that Tata Motors is trying to enter into that kind of a zone. So I believe that 680 levels and maybe slightly below this mark for the stock could be a very good buying territory for Tata Motors, especially if you have a time frame of medium to long term.
Erstwhile favorite, right? Tata
Yeah.
Motors. Okay. Let's also welcome on board Chandan Taparia. Chandan, hi, good morning. What's the trading screen looking like today? And that disconnect, fortunately, from the globe maintains today morning as well.
Yeah, good morning. Thanks for having me. So last 2 weeks were quite positive for Indian market. It seems that festive vibes is supporting the liquidity and the market momentum. However, from last 105 days, the indexes got stuck in a range between 24,400 to 25,500. But the way market is forming the higher base with positive data setup indicate bias could be on the upside. As of now, till Nifty holds about 25,000, we are expecting market to extend the rally towards 25,500 to 25,600. However, on the last trading session, the Dow was negative by 880 points. But I believe because of that, if any declines comes, that could be the buying opportunity. So as of now, till it holds about 25,000, better to be with buy on decline and go with selective stock and sector, which has potential to generate the alpha in this market scenario.
Okay. Sandip, the one space that I wanted to talk to you about, morning firstly, is defense. Now, fair point that valuations could be a concern. We've seen the last time or last year, October onwards or September onwards, when when the markets began their correction, defense and railways were the first ones which did see that cool-off sign come in. Having said that, more and more the relevance of being invested in defense has come to the fore, at least, from the start of the year to now. But again, the question is, what would you pick and choose at these levels?
I think you're right, because see what's happened, and as we observe global developments, so it's very the external linkages, global linkages are becoming very unreliable. So you don't know when you need something whether you get those supplies or not. So that's why indigenization, self-reliance is building up there. So, like I said, I've always said best company to play the Indian defense side has always been Bharat Electronics. So I think that's something which we also hold, and I think will continue to still do well. Most of the shipyard companies went up sharply, have corrected somewhat, and they also have a lot of earnings visibility. But valuations are still not cheap. So I would keep a lookout on them and look to add them at some stage. And then there are a few private sector companies which also do benefit because of defense investments. So there also the valuations are not exactly cheap. So the key is when to buy rather than whether to buy or not.
Absolutely. But Chandan, come in on the charts. BEL, the strongest of the lot so far this year. But are there any mid-cap defense names or, shipbuilding or the allied spaces that are also looking interesting on the charts?
Yeah, so first preference will be BL, one of the strongest counter, which has rallied well by more than 41% in this year and continuously moving upwards from last 5 to 6 years. Here, till it holds above 400, buy on decline could continue for an upside target towards 444. Now, talking about the shipping name, I believe Mazdok and GRSC could be the preferred idea in this space. Talking about Mazdok, the stock has recently bottomed out near 2600 marks, and after that supports are gradually shifting higher. However, multiple hurdles are visible near 3000, 3050. But once that is surpassed, I believe next leg of rally. So as of now, we'll go with buy on decline or range bound bias. So one can hold the long position with support at 2750. Look for an upside move towards 3000, 3060 marks. Talking about GRSE, here also the positive stance is visible. However, multiple hurdles are seen near 2800 marks. But once that is surpassed, stock will be heading towards 3250 to 3300 level. So apart from BL, one need to look at counter like GRSE and Masdok from the defense or shipping space in this market scenario.
Sandeep, I'm not sure if Sandeep's still around, but Sandeep, if you are, hospitality as a play, we had plenty of conversations with players, including the likes of a Make My Trip, which suggested that not only have the numbers held up in H1 FY26, we're expected to have a very strong H2. This trend and this play with regard to hospitality, do you expect it to sustain? That's point number one, on these elevated bases. And second, how do you play it?
Yeah, so I think hospitality will have a very strong second half. In any case, the second half is better with all the demand because of marriages, etc., also coming up. So there are various plays, like you said, all these companies which are the booking portals like Make My Trip, etc., are obviously there. And then you have airlines. So airline, we have just one relevant player, which is Interglobe Aviation, which is something which we have held for a long time and will continue to be long-term positive. And then there are the hotel companies, where the largest is Indian Hotels, and it's on a strong run, and I believe that it will continue to do well. And Indian Hotels is something which we have also held from for a very long time. The valuations went up substantially. Stock has gone through a long consolidation, and so given the valuation, it's not a stock which can suddenly double or something. But I think it will be a steady return stock. Then there are the hotel stocks like Lemon Tree, etc., which are more on the budget and business level side. I believe they should also do well. And then there are some other smaller companies. So, so I believe that in this entire ecosystem is in a good space and should do continue to do well.
Sandeep, what's the view on Swiggy and whether that can really catch up with the likes of Eternal or erstwhile Zomato?
See, I think Swiggy is something which is tough to evaluate. What happens is every time they come out with results, the cash flows, the negative results, etc., create some volatility. And then over the quarter till the next result, the stock continues to do well, and then the results come, and then we again see huge cash burn, losses, etc. It's very tough to build a case for any upside from current valuations, in my view.
Sandeep, also curious to know, talking of valuations, how should one play consumption? Some of them have really re-rated, especially in the auto pack. How are you looking at consumption and how would you play that?
I think autos going into a secular growth trajectory. In my view, the GST cuts have been substantial. Lower rate cuts help these companies on a significant basis, and so lower interest rates. So lower interest rate, higher disposable income, lower GST. I think it's a perfect troika sort of for these companies. So stocks have run up. People think that because they have run up over next few months, the story is over. Typically, these cycles will last 2-3 years at least. And many of these companies have got strong export stories also. So I would think that whoever holds the auto stocks, they should continue to hold. I don't see a negative coming in on auto anytime soon.
Sandeep, the talk of the town, though, has been silver, given that so many mutual funds have halted fresh flows. But you've always been a believer as to, put some part or allocate some portion of one's portfolio into gold traditionally, right? What's the call on gold and silver, and how much allocation, Sandeep, should one now have?
I've always advocated for a 10 to 20% allocation depending on the risk profile, and that's what I also tend to maintain. However, I think after gold crossed 3,500, I have stopped allocating. I believe that now it's in bubble territory. I think these movements of gold and silver clearly indicate they are in bubble territory right now. So I would So for people who are not exposed, and because they are reading of gold and silver going up every time, and gold and silver are the most becoming the most searched words on search engines now. I think these are the times when you need to be cautious, stay on the sidelines. Opportunities will come again eventually, and as these prices eventually correct and consolidate, go into a longer term consolidation, there will be opportunities to buy again. So I don't think people who are underexposed should be jumping in very substantially at these prices.
Makes sense. Okay, Sandeep, great to have you on the show. We'll let you go on that note. But